Hello traders, welcome to another daily analysis. Today is January 9th, Monday. We are right at 6:37 p.m. Eastern Standard Time. So we officially get into a second week of January, and I must say that time really flies fast because it just seems like the New Year's Eve it was happening, and now soon we are already entering the mid of January. And of course, things has been quite slow, and that's just the usual way, beginning of the year. Over the weekend, there wasn't really any tier one data. So, besides this one good building approval from Australia, really not a tier one data. So nothing really happens fundamentally speaking. Today was another quiet Monday without any tier one data over London and New York session. Now, however, we will have the Australian retail sales later on at 7:30 p.m. Eastern Standard Time. We'll also have the Chinese CPI later on today. So these two, of course, are also going to affect Australian dollar altogether. So we'll have to see what's going to happen. Equity market were all red today. So it's actually a risk-off sentiment day. And oil market actually tanked. It actually have a huge retrace, give us a red candle day. Now, news-wise, the oil market has another big concern over Iraqi crude oil export and the U.S. output. So basically what's happening is that this year, starting from last weekend, the OPEC is starting to implement its agreement to curb the output. Now, because OPEC has been known to be very inefficient in the past, and the members has been known to cheat. So basically right now people are really using the magnifier to see whether the members are comply. Now once you have certain members who does not comply, who actually shows a large number of export, then investors will lose confidence over the oil market. And that's what you see today, because you have a record high export from Iraq, and that's not a good thing because it says that they agree they're going to curb the output. So all these kind of small events is really gonna shake the confidence of the oil market, and that's why I always say that oil market is really volatile. So if you want to trade it, just be careful. For me personally, I never like to hold it long term. I actually had a Canadian dollar trade that I hold it over this weekend, which I'll go over with you. And it was actually, thankfully I did not lose money. I made some small profit, but it was really scary to hold oil-related currency, which is Canadian dollar, over the weekend. It's just because right now, especially this month, all the way until March, is really the period that oil market is going to be very volatile. Now, of course, it can work in two ways. It can either help you. We could have a huge surge today, or it could damage you, which is what happened today. So I'll go over that in the chart session. This week, we have the following risk events. Again, Monday, today, we will have the Australian retail sales. Now, let me give you the expectation. So the maximum and minimum I have typing already. You can of course certainly take a look if you decide to trade it. We expected 0.4%. If anything above 0.7, that's a positive deviation. You can buy it against Japanese yen. If anything below 0.2%, it's a negative deviation. You can sell it against US dollar. Now, the only thing you need to watch out is after an hour of this release, you will have a Chinese CPI data. Now, the Chinese data hugely affect Australian dollar. So, regardless of what happened to the retail sale, you do have to take into consideration of the CPI from China. So again, that's just something to watch out. That's just, for me, that's an unknown of risk that if I got into this trade, I will definitely try to move to break even prior to this Chinese data release. So I actually might be able to trade it since I'm right at my computer right now. So I might be able to trade this Australian data. Again, I only trade it if there's a surprise. Now, Tuesday, we don't have any tier 1 data, as you can see. Now, Wednesday, you have the manufacturer production from British pound. Now, British pound, what's happening today is another comment from Prime Minister May, and it just basically reignite. Basically, it just make the Brexit fear happens again. The comment basically say that they have to, they have to find certain ways to basically negotiate this Brexit deal. Now, really, I'm sure if you follow the news from UK, everything is really puzzling. Nobody knows what's going on, right? And the interesting thing is that even the official themselves don't know what's going on, because that's where you have the I forgot the guy's name, but the basically the person who's in charge of the negotiation actually resigned, and from his email leaks basically saying that he doesn't know what's going on. Like nobody knows exactly what is the plan for Brexit, and that's why it's very scary for UK, because this thing is happening in a couple months, and still the head of the country, the leadership, have no clue of how to lead and what's going to happen. And that's really a huge uncertainty over the economy. And as mentioned, no investors will invest in the country if it's political unstable. And that's really, it also shows how vulnerable UK is really at this position right now. Without the Eurozone, really they don't have any bargaining power right now. It's just such a really a negative position for UK, and that's really reflect in the British pound. As you can already see in the past, whenever we have a good data, we don't really have a big movement. You have a good data from pound from UK, but British pound did not surge. Now, whenever you have this one single comment, you see it dropped significantly, and that just shows you the overall sentiment is very, very negative. So for Wednesday, the manufactured production, or basically any fundamental data from UK, I'm only looking to short it. So I'm looking to sell upon negative deviation. So I give you maximum, minimum, of course. But personally, I will only sell if we have anything below 0.1%. Thursday, you have the Yellen will speaks, and I don't know what's the content or exactly what's going to happen, but anyway, whenever Yellen speaks, sometimes it will provide a tradable event. Sometimes there's no event. So really, if you're not sure, you don't need to trade. You can stay out. For me, I'll be watching out for that, but I don't even have enough information right now, so I don't even know if it's tradable. But it is a tier 1 data, a tier 1 event, basically. Finally, on Friday, we have several US data. You have the core retail and retail, core PPI and PPI. Now, this is certainly tradable. And for me, I'm only, again, looking to buy US dollars. So I'm looking to buy at maximum, at positive deviation. Right down here, so you can take a look at it. The only thing you need to watch out is whenever you have this kind of several data coming out at the same time, the most number one criteria is congruent. So you don't want to trade it when you have mixed data. So for example, if you have a core retail that is good, then you want the PPI to be good as well, and you also want the retail and core PPI to be good. So you don't want to have a mix, maybe a positive retail and negative PPI. That really, decrease your odds significantly. So for me, that's really the number one thing I'm looking at whenever I trade this kind of data release, when you have more than one data. So congruent is the first thing. Then if everything is positive, then I can buy, but I need at least one of them to be a surprise for me to have more momentum. So basically, let's really, looking at this right now is really not much tradable event for this week, because Monday it's already passed. You only have one Australian data. Tuesday you have nothing to trade. Wednesday only have this British pound. Thursday really has nothing, and Friday have US data. So that's pretty much it for this week, risk events wise. So let's take a look at our daily chart. But first thing first, so last Friday I actually took a Canadian dollar trade upon the positive data from Canadian. So we do have a positive surprise last week from Canada. I was gonna trade NFP, but NFP was it was positive, but it was not. It was no surprise. So I didn't really trade it. And we actually, if I remember correctly, we do have a mixed data out of NFP. So you have a lower than expected non-farm employment share, but better average hourly earning, and in line of unemployment rate. So that's why it's not congruent. Of course, later on, you read the news more detail, it's still a very good number for the non-farm employment change, and unemployment rate was due to right here, the unemployment rate 4.7 is higher than 4.6, but it was due to that more people are actually right now searching for jobs. So overall, it's actually quite positive for US dollar. That's why you don't see much dropping last week from US dollar. Canadian dollar, however, was a huge surprise, 53.7 thousand versus the expectation of minus 5.1. So same as trade balance. So this is a very good data. So I traded against Japanese yen, and I actually hold it over the weekend, which really not something I particularly like to do, because the gaps is really scary for me. The only thing I really prefer currency market over stock market. One of the best attraction for me is really the gaps, that the currency market has basically no gaps if you trade Monday to Friday. Basically, if you close your trade Pride weekend, you really suffer very little of gaps. Of course, sometimes you have risk events like U.S. election, you will have gaps. But besides anything except that, you don't have gaps like you have in the stock market. So whenever I have to hold over the weekend, it's always kind of scary for me personally. I still hold it because of my analysis, and I got out right after Sunday opening. I basically got stopped out. So basically, let's say nothing really technically nothing really interesting. Basically, I just got in with this green candle. This is hourly, so I actually got in maybe in a midway somewhere. I jump in and then just write it up, not much, like 45 pips, got out here, and that's it. So really just a small scalping for a risk event, but we don't really have anything daily trade for last week. So that's why it was still nice to have at least one trade for beginning of this year. And so this week again at 7:30 later on, I will take a look, maybe trade Aussie yen or RC dollar, just to see what happened later on. Okay, so let's take a look at our daily chart. Just give me 1 second. All right, so take a look at euro. So euro pound today, of course, large buying power, and that's really due to the large drop of British pound from the Prime Minister May's comment. So this is, of course, a significant level of resistance, and this kind of events, of course, we don't know how long it's going to last, but nevertheless, it does look like that British pound is really more volatile and more negative than Europe right now. So I'm still not looking to actually buy this currency pair, just because they both are very negative sentimentally and fundamentally speaking. So for me, it's just a guideline for me to see. I might trade it upon risk events, but I really don't like to trade it over a daily chart. Now, people might argue saying that you have this kind of sort of kangaroo tail. Of course, the thing is that this surging, the green candle today really has nothing to do with these prior few days of. It's not because you have 0.85, so that's why it react and you have a buying power. It's really the risk events. So just take into that consideration that sometimes an unexpected news will drive the currency, and sometimes it will drive it to the same direction as a technical analysis, but sometimes it will drive to the opposite direction. So Euro Swiss, really nothing much happening. We're still in this ranging area. Euro dollar, As you can see, again, we really just stuck in this 1.05 to 1.07 area. Really stuck in this zone ever since last December. So, of course, my agenda is looking to short, but I'm still need a signal to get into it. Euro Aussie, on the other hand, continue dropping, and that's okay, of course, due to, fundamentally speaking, Australian dollar is stronger than euro. Today actually have a small candle, so regardless of the oil market, it does seem like Canadian dollar was not affected too much, but I'll take a look at it later on. So really nothing much happening here for Euro CAD. For Euro Newsy, again, it's really nothing much happening here. Now this is a solid red candle, and New Zealand dollar is stronger than euro, but personally I just don't like the position of the trade. It's stuck in the room. For me, I really like to see space whenever I trade a trade. I really like to see something like this. This is a very good one to short. Of course, last day of the year, that's why it doesn't really work out as well. But like, you have this red candle, it's really not going anywhere, as you can see. So that's why personally I often like to have at least a space for a red bullish candle to work. So for me, it's really not in the right direction for this Euro Newsy. Let's take a look at Euro Yen. The same thing is just, for me, just stuck in between, Euro Newsy, Euro Yen, Euro Dollar. It's just really nothing much going on. Pound Swiss, again, another drop of British pound today. Another drop, so no surprise because of the comment from Prime Minister. And look at how strong this drop is. It just shows how strong Australian dollar is, right? Pound CAD, same thing here, huge drop today. Pound Newsy and Pound Yen, so it's all the same thing. Now Pound Yen, people might argue, say, hey, this is a good bearish candle, very solid, we could have shorted, definitely. The only problem is that Japanese yen is the very weak currency on my analysis. So if it's pound dollar, then it's definitely a good one to sell. But because it's pound yen, they both are equally weak. So for me, I don't like to sell in this kind of two fundamental weak currencies. Swiss franc, Japanese yen, really nothing much going on. Dollar Swiss, again, not much going on. Dollar CAD, it actually hold pretty well in this 1.32. So looking to buy into it, but the only thing, as I mentioned, oil market is very volatile. So that's the thing you have to watch out when you want to trade dollar CAD. Dollar yen, really nothing much going on again. You do have this nice green bullish candlestick last January 6th, so last week. But for me, I didn't really do it, of course, because it's Friday. So that's why I don't like to enter a daily trade upon Friday. So I'm still looking at buying opportunity for dollar yen. Just have to be patient. Aussie Swiss, same thing, nothing much going on here. Aussie dollar actually continue to go up, so it really shows you Aussie really can pick up its momentum again versus US dollar. Now this might all change later on at 7:30 if we have a very negative Australian dollar a retail sale, but we'll see what's going on later on. But as for now, Australian dollar continue to gain momentum. Let's continue going. Aussie CAD, same thing. It's, for me, it's just in a range area. That's why I don't really like to take Aussie Newsy. Interesting, you actually have a bearish kangaroo tail in this bearish inverse hammer, basically at Aussie Newsy. So it's really, I don't really have a catalyst basically for Aussie Newsy. I don't have enough reason to sell Aussie. I don't have enough reason to buy Newsy, especially when Australian dollar versus New Zealand dollar. So that's why it is good technically speaking, but we'll see what happens. If we have a negative retail data later on, then that will be the catalyst for me to actually enter this daily chart. So I'll see what happens later on tonight if I decide to enter Aussie Newsy trade. But that's only if we have a negative data from Australia and from China. Now Aussie yen, again, same thing. You have this basically a dodgy. Sorry, it's not a basic kangaroo tail, but again, we don't really have any catalyst to sell Australian dollar versus Japanese yen. Especially Australian dollar is much stronger, fundamentally speaking, than Japanese yen. CAD Swiss, same thing, not much going on. CAD yen, it's still, again, we are right at this area. UZ Swiss, same thing for me. It's just a cluster of candle. I really don't like to take this kind of candlestick just because the position, you're just so tied up together. New Zealand Swiss, New Zealand dollar, same thing. It is a solid green candle, but it's just in between candles, candle by candle. For me, it's not something I particularly like. New Zealand CAD, same thing here, and New Zealand yen. So that's pretty much it. The only thing I'm looking at is Aussie Newsy. So if we have a negative retail sale data later on from Australia, or maybe a negative CPI from China, then this might not be a bad trade to enter as a daily chart. But we will have to see later on in another half hour. Other than that, I don't really have much. Aussie dollar seems to continue going, but it's not, you see, I don't have a space in this kind of green candle. It is certainly a very solid bullish candle, but for me to sell US dollar is just not something I particularly want to do. So I only do it especially when I have a very nice signal technically. So really not something I would do. And that's it, guys. As for risk events, again, only have few for this week. So really looking out for today, Wednesday, and really Friday. So again, another quiet week. No surprise, beginning of the year. It's relatively normal. That's just how the thing work in currency market. So especially January 20, Donald Trump is going to officially sworn in. So that's really going to, so things are gonna pick up basically later on, maybe in February, March, and you still things will become more excited basically for this year. All the big events, European elections, Brexit, and all this thing will happen after later of 2017. So just have to be more patient. If you don't have anything, then for me personally, just don't force trade it. It's better to keep your money than to bet on something that you don't have much confidence over, right? So don't waste your money on trade that has very little probability. That's it, guys. If you have any question, feel free to let me know. Otherwise, I'll be back tomorrow with another daily analysis. Thanks for watching. I'll see you then. Bye bye.